Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hey everybody, Kevin Cook here with top stock picks of the week. My pick is Micron Technology, Zacks #1 rank, as you can see here. And Ben Rains, my colleague, will follow with his top pick. I want to go over, we're going to look at the resurgence in growth for Micron, the megalodon of memory in both DRAM and NAND technologies, serving every industry, from mobile to data center. We're going to look at those estimates, but first I want to go over the big story last week. And the big story, especially in semiconductors, was Intel dropping a 10 nanometer bomb. This was the write-up I did for Zacks Ultimate members on Friday afternoon. And basically what happened is Intel, in their report on Thursday, came out and said, hey, that 7 nanometer technology that we promised you last year, we're a little behind on that. And so that caused this amazing flip, basically an earthquake in semis, where, as you can see here, Intel was down 16% on Friday, and competitor AMD was up 16%. The synchronicity here is amazing, and it pivots around this idea that Intel wants to build everything in house, and they're not ready, even though they said they're up to a year behind their internal roadmap with 7 nanometer technology. And that's basically how small are the transistors. By the way, a nanometer is 1 billionth of a meter. Whereas AMD is already putting 7 nanometer chips in PCs and laptops because they went and outsourced. They went to Taiwan Semiconductor. So obviously, Taiwan Semiconductor is the big story, up another 10% today. It was up 10% on Friday because this is the foundry, the fab. They make everybody's chips. So, I mean, Apple put the first 7 nanometer chip in an iPhone, the X, I believe, in 2018. They had Taiwan Semiconductor build it. AMD has them build. NVIDIA has TSM build stuff. So that's why TSM is up, 10% again today. Just for a review, what we're talking about here on the nanometer scale, if you can zoom in on this graphic, here's your basic coronavirus right here, at over 50 nanometers big. And so when we're talking about this semiconductor manufacturing that's going on down here under 10 nanometers, you get an idea for how small it is, almost as small as DNA base pairs. All right, so that's the story with Intel and Taiwan Semi and AMD and Apple. Let's get to Micron and their resurgence in earnings. A 55 billion market cap, and look at these sales coming back. We had a dip this year. We've gone through the trough in the peak memory, so to speak. So 9% pullback in revenues last year from Micron, but coming back strong to 24 billion. So trading just over 2 times sales. It's always been a value stock because memory is considered such a commodity, but Micron is innovating. And so let's look at we'll answer the 7 nanometer question for them in a moment. I just want to show you the earnings recovery here. So took a big hit on earnings, in this fiscal year, coming off of peak EPS of over $6 last fiscal year. We're taking a 57% hit this year. But this year ends, we're in the final quarter, and the resurgence is on. So we're going to get back to $4 in EPS power. And here's the estimates coming back this year. Look how they've surged. This is why Micron's #1 since their last report on June 29th. Amazingly strong report, and analysts had to take estimates up. They went, since that report on June 29th, they went from 243 to 276 for this fiscal year, and next year they took from the 370s back above $4. Okay, so where is Micron in the 7 nanometer world? Well, in part of this report I did for Zacks Ultimate subscribers on Friday, I found some excellent articles. Like if you follow the guys at Tom's Hardware, go to tomshardware.com. They do some great stuff on all this, and they've analyzed why DRAM is stuck in a 10 nanometer trap. Memory, DRAM and NAND are harder to break down to get to the sub 10 nanometer area, but Micron is working with a small private company called Acronix out of California, who is working on, has significant 7nm technology, and so that's a plus for Micron. I just see it as a great long-term buy here at $50. In the cloud, in mobile, autonomous driving, and then just basic memory power as the megalodon of memory. All right, thanks for joining me. And next up is Ben Rains.
Thanks, Kevin. Ben Rains here, and I'm breaking down Dollar General, which trades under the ticker DG. The company sells everything from food to motor oil for what it calls everyday low prices, which does stand in contrast to its rival Dollar Tree, which has that $1 for everything pitch. The company operates roughly 16,000 stores, which is way more than Walmart and others across 46 U.S. states, often in more rural and working class areas. The retailer has thrived in the e-commerce age by expanding its brick and mortar footprint in areas where Amazon boxes aren't necessarily the norm on porches. Plus, DG has rolled out its own digital offerings. This includes testing out more online ordering and pickup in-store options. And it's thrived during the coronavirus stay-at-home push. So if we look in Q1, DG topped our first quarter estimates at the end of May, with sales up a whopping 28% and adjusted earnings up 73%. The company noted that pandemic stockpiling and more economic uncertainty helped drive its first quarter sales. Plus, with millions of Americans still out of work, Dollar General's affordability is likely to remain attractive to many customers, not only going forward, but for years and years to come. Looking ahead, our Zacks estimates are calling for DG's Q2 sales to jump another 17%, with fiscal 2020 revenue projected to surge over 15%, which would mark its strongest growth since 2012. And it's worth noting that Dollar General sales have climbed at a high single-digit clip or higher for all of the last decade. So it's really been on an impressive run for this big U.S. retailer. Meanwhile, its adjusted Q2 earnings are projected to climb 34%, with its full-year earnings per share projected to jump another 32%. And these estimates are up pretty big, which means analysts are higher on DG than they were before it reported its Q1 results. So this positivity helps it earn a Zacks ranked number one strong buy at the moment. And it's also part of a highly ranked Zacks industry. And it holds a B grade for value and an A for growth in our style score system. And in terms of its price movement, the stock has been on a strong run. It's up 150% in the last 3 years, which easily blows away the S&P 500's 30% climb. It's up about 20% so far in 2020, and we should know that it has moved relatively sideways over the last month, which could give it some room to climb when it reports its next results, which are expected to be out in early September or late August. On top of that, DG still trades at a solid discount compared to its industry, and its dividend tops the 10-year U.S. Treasury note. So overall, DG looks to be a solid pick for some income and stability amid the current coronavirus crisis and going forward. So that does it for this week's top stock picks, but head over to our Zacks.com/promo page for a free copy of Finding Number One Ranked Stocks from our Executive Vice President, Kevin Matrix.